The market has hit a new all-time high today, and in honor of getting above 7,200 for the first time ever, we're going to do a daily trade review. Before going over to the 5-minute chart, let's look more at the daily chart, and let's look at where the market might be going. An important thing to note first is that the price action over the last few days has been a double bottom, a breakout test of the prior high back from December and November. So we can draw it on our chart. Here are those prior highs. And look how the last few days have been reacting to this prior high. We had about 4 or 5 days in a row, strong bull bars up. Then it pulled back and tested that previous all-time high, leaving today with a pretty decent looking bull bar. Now, if the market goes above that on Monday, then that would be a buy signal. So we are getting a bit above the moving average, but there's confluence with this very strong rally up. I mean, we're up like 800 points in a few weeks from this low here. I mean, that's a giant move up. So there's probably going to be a little bit more up after we've had this pullback. And considering that pullback came back and tested that previous all-time high twice, market probably has a little bit more up. And anytime the market tries to do something twice and fails, it usually does the opposite. So we try to come back twice here, failed twice, we're probably going higher. And if the bulls can get above this high on Monday, we're probably going higher. So how much higher? Well, one way we can start is drawing a leg one, leg two. So this was a pretty sharp move up, so we can draw our leg one there and then copy and paste it up. And that puts us near 8,000. And that's possible. We could get there within just a few months. You know, I mean, remember, this is just a daily chart here. And we already did this move here. So to get up to 8,000, that would not be impossible. In fact, I think getting to 8,000 this year is a reasonable target. So will it happen in the next 14 days like I have labeled here? No, I don't think so. I think a lot of this buying was just to get us back to our normal price over here. But I think this second leg, I think it's a reasonable target around that 8,000 number. So probably it won't play out where it just immediately goes up like this. But the 8,000 number, I think that's probably where we could be looking at for this year. And a more macroeconomic reason why this might happen as well is this is a midterm year. The Republicans are currently at risk of losing both the House and the Senate. So they really need to get their act together in these last few months before, I believe in November is the midterm elections. They need to get the gas prices down. Stock market needs to be pumped as much as they can. Grocery bills need to go down. And I think Trump and the Republicans will be very focused on that over the next few months as the Venezuela and Iran conflicts kind of wind down. So considering we have those political pressures where the Republicans, to maintain their power, to maintain the Senate, then they really need to push as much as they can to get the stock market up and then grocery bills and other costs down. So what's the bear case with this? Well, we have made a double bottom above the previous all-time high over here, but we really haven't moved up strongly above that yet. You know, we have a bullish setup, but once Monday comes and Tuesday of next week, that market might start pulling back and get below these highs. And if that happens, even if the market does end up going higher, it might need a few days or a few weeks to maneuver around this all-time high and the moving average. So if it fails to go higher, it probably needs to come back and test the moving average first and then wait a few weeks and then start a move up. And in fact, I would say that would be the more likely outcome. Probably we won't go too high immediately here. We'll probably have to wait for the moving average to catch up to it, and then the market would go higher. So probably we'll go sideways here for over the next few weeks. You know, sideways more or less. That sideways might be like up 200, down 200 points, but we'll probably let the moving average catch up, and then the market would start to go higher up towards that 8,000 number. Another possible take that someone might have would be a broadening wedge pattern. Let me clear up some of these lines here. So different people call it different things: a megaphone pattern, broadening wedge, expanding triangle. But you can see I can loosely draw on our broadening wedge pattern here. And what this would mean is that we're at the top of this channel line up here. So typically when you're looking at this, you would expect the market to find a resistance up here and then pull back at least to the middle, possibly all the way back down to the bottom, somewhere way down here. So that's something you need to be aware of if you are trying to buy up here, is that you're possibly buying near the top of this resistance, this broadening wedge. But of the outcomes that we've discussed, I would place this as the least likely. I think this was a really strong rally coming off of these tariff lows from last year. And then this Iran move down, really, it was just a failed breakout lower of a couple points through here, this low and this low. So double bottom, we failed to break below that. And then now we're reversing it very strongly. So I would put the bearish case of there being a broadening wedge here as less likely, and more likely we are going higher over the next few months. So let's look at the 5-minute chart now, and you'll see what I have on here is the prior all-time high marked. So you really always want to have those important levels marked on your chart. And if you don't, you're just missing out. You're not getting all the information you need. And these prior all-time highs, they can act as targets, they can act as support and resistance. And today was a great example of that because it acted as all three. Swing buyers early in the morning, they saw the all-time high as a possible target, so they gave them confidence to enter in the first place and to try to hold up to that level. And then later on, once it did get to that level, watch how it acted as support 5 or 6 times throughout the day. So make sure you always have those levels drawn on your chart. Now, a point I want to make first before getting into the possible trades for the day are that the way the market has been moving, the way it's been so volatile and so news driven, as the Trump market usually is, it's very news driven, very fast paced. This is a market where you really want to be swing trading instead of trying to scalp. So I'm going to talk about how there are reasonable buys down here. And really in this market, I would just forget about trying to scalp. So, whatever your scalp size is, 2 points, 5 points. Some people go for like a tenth or one 1,000th of the S&P price. So if we're at 7,000, some people would try to scalp for 7 points. Then whatever your scalp price is, I would just forget about trying to scalp and instead focus on swing trading. So try to risk a small amount and then try to have your profit target far away so that you can capture these large news-driven moves. And that's good advice for any time you're in a very volatile market. When you're in a volatile market, there's going to be lots of trade opportunities, with a lot of scalping opportunities. And when the market is being volatile, it tends to reduce the winning chances of a scalp, but it seems to maintain the odds for a swing trade. And in fact, it's probably even better for a swing trade because it creates those much larger moves, larger room for profit. But in a volatile market, if you're trying to take lots of scalps, you can lose a lot of times and it can really mess you up. So with the Iran war, this very news-driven market, just forget about scalps for a bit and just try to focus on finding the trend, trying to find trapped traders and ride the trend out for a while. So looking at today, it's a very, very clear, very textbook swing trade on the open. So market gapped up, and what we like to look for if we're bullish is, a gap up and the market pulls back to the moving average, and then it struggles to get below the moving average. And then you look for buys above bull bars around the moving average. And that's what we have here. We have several opportunities of that today on the open. So if you're coming in, it's 9:30, you get a big bear bar. Okay. It's followed by a bull bar. Then that's followed by a bear bar and then a bull bar. So just from that alone, the odds of a trend in the first place are decreased just because of the sideways movement. But it also means the odds of a bear trend have decreased. So a lot of the times when the day is going to be a bear trend and the market gaps up, so we have a gap up, if the day is going to end up somewhere down here, just a bear trend day, you'll usually get a second bear bar. So first bar is a bear bar, then a second bar you get follow through. And then a lot of people end up shorting below that for a short, for a bear trend short throughout the day. And with you getting these overlapping bars, that means the bears just aren't that confident that the day is going to be a down day. The first hour, the first 12 bars here are very sideways. The bears, they're trying to turn the day into a bear day, but they're just unable to. Look at the different pushes. The first bar is a push to go lower. Here we have another big bear bar, comes down, tests the moving average. We go a little bit higher, and the market tries again to go lower, test the moving average again. And in fact, you can see a head and shoulders bottom with left shoulder, head, right shoulder, and multiple tests of this area. So the bears have been trying to go down, and they can't. And then we're early in the day. Reversals often happen early in the day, and the bulls are gaining strength. So this looks like a good area to try to be buying for a swing trade. And remember how I said you don't want to be looking for scalps in this market, or at least not as much. You really just want to focus on taking a couple of good swing trades a day and trying to find a good trend and let that ride. So there's several areas to buy on the open depending on how aggressive you want to be. And basically, I would say after this second bull bar here, I would say all of these would be reasonable places to buy for a swing trade up. So once again, not for a scalp. I don't want to buy and try to get a couple points out of this. I want to buy and try to catch a move up to the prior all-time high. Okay, so we're looking at this. The bears are saying we might be able to control the day and get the market to go down. We might be able to keep them from getting up to the all-time high. And the bulls are thinking, well, if we can stop the bears from doing that, then we might be able to push it up to the all-time high. We can trap them and short squeeze them up to the all-time high. And that's what happened. So that's where your mind should be in a situation like this. And just being patient and waiting for the bears to prove themselves that they're going to fail. Wait for the bulls to prove themselves that they're going to win. So like I said, all of these bull bars are reasonable places to buy depending on how aggressive you want to be. So I would say the most aggressive buy would be this bull bar here. So it is a second entry long, right? You have your first bar. Here's your first entry, pullback, second entry. We like to buy above those second entry longs. But we have these overlapping bars, bear bar, bull bar, bear bar, bull bar. Just going sideways here. It's best to not try to buy above that. Like I said, this would be an aggressive buy, but it's I think that's reasonable. You just need to know that it's aggressive and your odds are probably lower. And but this is common. When you're trying to find a swing trade early in the day, usually you're going to be wrong 2 or 3 or 4 times before catching a big move. You can go back and look at any day, and that's similar to this. And yeah, you'll say, if you're trying to find a swing trade early, you're going to be wrong 2 or 3 times, and then you catch the one big trend. And I'll show an example. Went back to April 15th, and you can see 2 bull bars, reasonable to buy above that bull bar. Then you would have been stopped out. You would have lost on the swing trade there. And then you find a reasonable entry again, maybe above this inside bar or above probably this bull bar. And buying there, then that would have worked. And if you would have managed it right, you could have maybe exited with a small profit here, then re-entered here. Or you could have just held it the whole day and had a very large win. So that's common. If you're going for trying to find a trend early in the day, you'll be wrong once or twice or 3 times, and then you'll catch the big winner. So, it just depends on your style of trading and how you want to go about it. So looking at the context of this day, If you would have bought here, you would have lost. Here's another entry. If you bought there, you would have had your winner. So let's say you go for 2 times your risk, you buy there, and maybe you exit all of your position at that level, or you exit half and then try to hold the rest and hope that the market just keeps going up. Another spot would be to buy above this bar or this bar. Okay, and once again, if you hadn't entered on these first 3, then you bought here, then once again, you would have been stopped out if you put your stop below that bar. And then here's another entry. Another reasonable entry would be to buy there or to buy there. And with either of those, you would have caught the large move up that broke above the all-time high. So when you're trying to catch those early trends, you're probably going to be wrong once or twice or 3 times. And then the idea is that when you catch that big trend, then that win will offset those smaller losses. So you wouldn't want to take all of these. You would just choose one. And then if you got stopped out, then you would wait for the next entry. But you can see we're crafting a way to not just blindly try to find entries or early trends. We can see that the market had been in a bull trend on the daily chart, and then we have this all-time high above. So we're putting multiple things together, right? The bigger trend is up. We're having this pullback to the moving average. The bears are failing. There's a target above. There's multiple things that we're putting together that to say, yes, we're finding a way to increase our odds that a buy would win and lead to a large trend up. So we're not just kind of blindly hoping to catch a trend. We're being patient and waiting and trying to find an entry that has some confluence. There's a target above. There the bears are failing. You can put multiple things together, and that puts the odds more in your favor. So this third bar would also be fine to buy above. Once again, for a swing trade, not a scalp. I don't want to be buying above this, trying to get just 5 points, with my risk here or somewhere down here. I want to buy here, putting everything together that we've seen so far, that this might end up being a large move up to or above this all-time high. So I want to be swing trading and capturing as much of that profit as I can while keeping my risk somewhat small. So if I'm wrong and it fails to go up there, then, my risk is small. I don't lose too much. And if I'm right, it's a very big win. So these are the moments that you want to be patient for and try to capture. You don't want to go out and try to force the market to create a trade for you right at that moment. It's much better for you to have in your mind what you want to trade and then wait for that to come to you, and then you snatch that. So the market trickled up, and then what's the biggest bar of the day? Well, it was this move that broke above the all-time high. And there's some really interesting price action here that led up to that. So this big bull bar, was it a news event or was it just pure price action and just traders finding a way to push the market up? It might have been a news event. There might have been some word on the Iran war. But it doesn't have to be that. This can be purely price action, and I'll show you why. And first of all, that bar isn't that big anyways to have to be a news event. But what I'm looking at here as far as the interesting price action, look at these 3 bear bars. Market's moving higher. I tried to go lower here, and then in the same area down again. And once again, tried to go lower. So that's 3 attempts by the bears to go lower. And so definitely by this third time down, I would already have this sort of temporary resistance line drawn in. And, so you'll just leave that line on there basically for the rest of the day or maybe even into tomorrow. So if the market breaks below it, it probably would act as resistance if the market does go below it. In this sense, in this case, it stayed as support. So it was resistance here, then it broke above it, pulled back several times, and proved that this area is important as a level of support and resistance. With the bears failing 3 times, and with his prior all-time high above, what I believe happened was sort of everyone figured out at once that the market was going to go up. all the big funds, all the algorithms, they all saw that the bears were unable to push the market lower. There were all these short orders that the owners of those orders were going to be very scared if the market started going higher. And what we see is the bears did just that. They got scared, and the bulls know that they're getting scared, so the bulls try to buy even harder to push them out, to squeeze them out. And so you just have this vacuum and this collapse on the part of the bears. Everyone knows the market's going higher, so the bears rush out and the bulls push them out and push the market up higher. And that's how you get bars like that. So it just acted like a magnet, and it just pulled that market up right up to that high. And from there, the bulls did close above that prior all-time high. So that was good on the case of the bulls, but it was mostly just a sideways day after that. Now, to me, the action was early in the day. This when the best trades was early. And, buying early like this, and then by noon, you've had a big swing trade. Maybe you took a couple small losses early, and then you had a 30 or 40 point winner. That was the good action happened early in the day. But there were probably a couple more trades that were pretty good here later in the day. And once again, you should still just be focusing on swing trading. So when trying to think of where to swing trade, what is the trend doing? The trend is up. Currently, looking at yesterday, the market had pulled back quite a bit, but currently the market is above the moving average. We're getting big bull bars. You want to be looking to continue to try to buy above bull bars, especially during pullbacks. So the first one that really catches my eye is this bull bar here. We broke above this all-time high. Market tried several times to pull back below that level, and the moving average pulled up to this level as well. So a difference between here is that we're pretty far above the moving average, but here now we're more clearly finding support at the moving average and at the prior all-time high. So this is going to be a reasonable spot for a swing trade. You're buying here, putting your stop below, probably just below the bar. Risking 5 points, and you're trying to get 10 or 20 points and trying to get out somewhere up here, betting that the trend will continue. So that would fail. Pull back, another bull bar at the moving average, but it's just a first entry buy. Then you get a second entry buy, but it's kind of a weak bull bar. Big tail on the top. It's even closing below the moving average, so I probably wouldn't buy there. Then your next buy is here. Now this is your third consecutive bull bar, closing near its high, and after all these failed attempts go lower. So that's a good buy there, once again, for a swing trade. And the market could never get back below this prior all-time high. It tried again here and couldn't. So once again, it's just finding support there. Market might try to make another move up. So if you're looking for your swing trades, you're going to be buying somewhere in this area, either above that bar or probably above this bar or that bar. So you'll see you have several losses mixed in with several wins. That's what this whole day is looking like. And especially if you're swing trading, you're going to win less often. But when you do win, your wins will be large enough to hopefully offset those losses. And since we're in an environment where the moves can be so large and you can have such nice trends, then you do want to be switching and focusing more on swing trading. So structure your trades in a way where when you lose, you won't lose that much. And when you do win and when you catch that correct entry, then you can capture those large trends and those large profits. So don't be discouraged by having a couple losses. Make sure you're trading small enough. And just stay focused on trying to find the trend and wait for that to come to you. And that will be much better for your trading during these markets. Thank you guys for watching, and I'll see you in the next video.